Hello, good morning. It's Thursday the 25th. I'm FX Blue and welcome to the Thanksgiving brief. I'd like to give thanks for all the birthday wishes, of course. Mostly from me to me so far though. What could possibly top that as a cynical play to get more comments on the post? I know, it's a new low, but it's my birthday. But anyway, back to the brief. Because it's looking more and more likely that the Bank of England will have to hike rates at the next meeting. That would be despite Andrew Bailey's best efforts to talk down the threat of inflation. Hugh Pill also wanted to take his time. He voted against a hike at the last meeting, but he has since said that the burden of proof is now firmly on the shoulders of those who wanted to wait and see. One of the independents, Michael Saunders, has been in favour of tightening policy for a while now, and another independent, Jonathan Haskell, no, not the ex-England rugby player, that's James Haskell, aka Hask, aka The Fridge. But anyway, Jonathan Haskell sees positives of a rate hike, even from an image-conscious perspective. He believes a rate hike would reflect well on the success of the economic recovery. Talk about American psycho, though. An image-conscious banker is one thing, but the central bank, that's no place for Patrick Bateman. Crikey, indeed. Whatever next. But opinion does seem to be moving in the right direction now. The only spanner in the works is Christmas. I know, right? How did that sneak onto the agenda when it should all still be about my birthday? But there has been a traditional reluctance for the MPC to raise rates so close to Christmas. So maybe they'll wait one more month and lump it all in with the January blues. But despite the growing rate expectations, sterling remains under pressure created by the dollar strength. We saw a low of 133.25 yesterday. But over in the US, it's still my birthday. It's still Thanksgiving though as well, so we're pretty much done for the week with a nice long weekend ahead for the Yanks. Biden will certainly take a moment to give thanks for the employment numbers. Weekly jobless gave him a big boost towards his goal of full employment. New claims fell to 199,000, the lowest level since 1969, and that helped boost the dollar as market expectation had been for 260,000. Naturally, this bodes well for non-farm payrolls, but it may have been affected by some one-offs and seasonal factors that are prevalent at this time of year. So the dollar index does continue to improve. Yesterday we saw 96.94. When challenging the 97 level, euro dollar even dropped below 112 for a while. We'll have to see how much of that holds firm over the long weekend though. Euro dollar is already open this morning, a little higher at 112.15. So that's it from me. Hope you have a great day. I know I will. And just remember, we can talk about Christmas tomorrow. Cheerio.
If you do not have a clue, then just tweet through and ask FX Blue. Yeah.